And what I have ready for you, it's becoming the liquidity provider. Now, this is very cool features of TradingView, and we are part of, the first that are using it, and we're having plan to, do it more often. And I decided to go and have some educational sessions before we really start going to live sessions. Reason being that I need you guys to understand what we are saying, because if you are not part of Forexia and you're getting to know us through TradingView community, we do not believe on signals or account management or stuff like that. We really want everybody to learn and, get their own setup, take their own signal. Okay, so let's jump into this. What do we mean by becoming the liquidity provider? So liquidity provider is basically market makers. If you search on Wikipedia, it's going to be same thing. It's going to literally say liquidity provider or market makers. So we are dealing with individual or company, a group of people we don't really know. But what we know is they got power and they got money. And these two are enough to, be able to make whatever pattern you want into the financial market. So when you have the power and you have the money to move the market, now the last thing you need is bunch of people, hedge funds, traders basically, to fall into your trap. So what you're gonna do is going to basically, if you wanna trap them, you are gonna teach them something wrong. Now, retail trader believing in support and resistance as, price. If we can break it to the upside, that's a resistance. If it can break it to the down, it's support. They also have same rules applying to trend lines, and combination of these two usually is the poison. Where retail traders see their trend line being respected, also support resistance zones are basically respected as well. Everything comes in line for a retail trader to make a decision in order to buy or sell. And once enough of retail trader got into that trap, it's time for market makers to reverse the price and grab their liquidity. How is reversing the market grabbing their liquidity? By hitting their stop losses. When you enter a trade and you lose money, that money is the liquidity that you basically gave it to market. Okay, your own liquidity. And market maker's job is to trap you as much as possible to give your liquidity so he can actually provide that liquidity to profit himself. Make sense? Absolutely. It's very harder in cryptocurrencies too. But however, it's a good thing that we basically know. Now it's not anymore something that we don't know. We basically cracked it, right? So in order for you to become a liquidity provider or be a market maker, you need to buy and sell exactly when retail trader are, doing against. So if you want to buy, you want to see retail traders confirmation for sell. And if you want to sell, you want to see them buying, okay, for any realistic or unrealistic reason, whether you believe it or not. The only way to become a liquidity provider is to master how retail traders trade and reverse engineer them. Starting with this trend, let's get to the chart. Starting with this trend, I'm going to show you what happened in previous trend and why it's important. So the trend that happened before this, you can see this is 1 hour time frame, euro US dollar. By the way, what I'm about to show you in this session, which probably going to be more than an hour, it's good we don't have time limit. So what I'm going to show you in this session is you can apply it to any financial market, stock, commodities, cryptocurrency, forex, whatever that goes up and down and there is money involved, you can go for it. So in process of creation of this trend, you can see these are basically the zones that retail trader going to, let's say for the next, let's say when price is actually coming up from this, these are the area that retail trader find that find it as a support or resistant or important zone in general. Okay, and something else that they do is that they refresh their chart very often. Every day when they come to the, when they have a timing that, to analyze the market the night before or right at that time. And what they are going to do is refreshing their trend line. They will say, oh, this is probably this. I was wrong, because of the zones that is being manipulated. Okay. So let's say they have it here right at this area. I'm going to talk about this area down here. Let me put it up. What happened in here was that lots of retail trader who's trying to follow trends because they believe trend is their friend will wait for this support, supposedly support, to be broken and retested. Also, they want to see trend line in order to sell. And those who take reversal trading are calling all this area, whether support or double bottom or head and shoulder, whatever they want to call it. And I promise you, if you go and drop any indicator here, RSI or whatever that those indicators that comes down here, it's gonna show you that it's, I don't know, oversold or it's time to buy, and price keep respecting this area for a reason, to generate buyers, reversal traders, so they can come and grab their stop losses. And in process of grabbing their stop losses, sellers become trapped. So if you want to participate in this move, you need to sell when retail buying. If you want to participate in this move, you need to buy when retail traders selling. Okay? So when all confirmation for retail traders come in a place that they, get that signal for a sell, you can go and look for your buys. But what patterns are we looking for? The patterns we look for is daily structure. You can learn more about this on our YouTube channel, our free book, but I'm going to explain it real quick. Daily structure is basically a pattern where you go into the cycle of disaster, and also known as Hegelian dialectic, has 3 phases of problem, reaction, and solution. And that's going to be a solution. So if you want to put it in the retail word or trading word, this is where retail trader getting trapped. The second phase, which is reaction, is where people, retail trader getting induced into taking their position / stop hunting people who are actually right in the direction of market. So if someone, let's say in this example here, if someone willing to sell and already sold here and their stop loss is above this high, they will get a stop hunted first. At the same time, those who are buying from this support will see green candles. And those green candles is basically confirmation for whatever you want to call it, price action engulfing in the support. And then another green candle, notice this is hourly time frame. So this is, if you're trading in 15 minutes time frame, that's 8 candle. 30 minutes, that's 4 candle. Okay, so retail wants to see momentum. Here you go. Here's your momentum. Stop hunting the high of previous day, which will be whether people who have bias stops or their stop losses. Okay, so the purpose of this daily structure breakout is to induce or stop hunt people. Okay, very important to understand. Okay, same thing with the other pattern. And in order for you to enter, you want to participate in second leg of M or W, and better to wait to see for, you know, that stop hunt candle or wick, and then you can actually participate. That's another example right here, which is pretty good. So price goes into consolidation, and what happened next is stop hunt right before actual move. And a lot of people fall into, you know, trading to fill this wick. Support is respected. You know how retail traders do. And then price goes for the liquidity. And this cycle happens over and over and over. So when we find that macro trap where a lot of retail traders getting into sell, and we have possibility in reversal, then when it's to the upside, you want to look for this one. Now let's see how many times this happened during this uptrend. Let me actually make smaller one a little bit, or no, it's actually cool. Okay, so let's start from here. Consolidation, stop hunt, push. And then consolidation, stop hunt, push. Consolidation, stop hunt, push up. Trapping people, comes back down. This is probably, let me see, that's probably what we call it midweek reversal, where they are giving intention to retail trader that they're going up, and then they get rid of their stop losses, get rid of them by hitting their stop losses, sorry. And then cycle continues. They don't want, that's the whole point, guys. They don't want retail trader on their side. And they do whatever it takes. If it takes them staying in a zone for days, they will stay in a zone days to trap people. If it means a quick move, 400 pips of, you know, move in one single day to trap people, that will happen. Why? Because as I said at the beginning, they got the money and they got the power enough to move the market however they want. So if they want to create any patterns to trap you, they can successfully do that. So let me get rid of some of these because we're not done yet from this trend line. I'm not trying to show you just one single pattern. I just wanted to get rid of that usually question of where do I enter. Now, you want to see, as I said, you finding a reason and, you know, enough reason for retail to selling, so you want to buy from now on. And you know you want to look for that daily structure. But how to confirm that daily structure going to work? By reverse engineering the retail trader and find the time that actually you are buying when retail selling. Okay, Now here is an example right here, which I personally would not participate, because a lot of retail trader might see this as a break and retest. Did it work? Yes, but you need to understand that you have to see it at the time and believe the retail trader is selling it or buying it and you go against. If you find where you buying retail might buy too, I strongly advise to just don't take that trade. Doesn't matter if we played out. You want to be safe when you're trap trading. The next day, price push up to this zone, leave a weak rejection for retail trader, and then it start coming back down. Then this is what makes me happy, and I want to enter that trade where retail trader just got a fresh sell confirmation from their zone, and you bet there is lots of them right at here drawing their trend lines like this or this, finding this as a perfect sell. And when that happened, that's when I'm interested in a buy. When retail trader getting all the confirmation they need to sell, after I'm finding lots of sellers trap. So I'm going to keep looking for sellers trap and participate in the direction against them. So this was the first one, and then this would be the second one, and this would be the third one around here. It's perfectly rejecting for retail trader, and we can go. So Forexia is so generous. We have lots of different setups given out for free. And I'm going to cover another one here for you. So if it's hard for you to find that perfect entry, thanks to another mentor of Forexia, Brandon, we have ECR. ECR is a method shortened for EMA cross retest. I'm going to add a little bit of salt on it and give you a little more accurate moving averages than retail trader use. That's just a treat for TradingView community. Just to show you guys we're here in another level, not your average retail trader. Okay, so EMA cross and retest is basically when we use two moving averages only, and any period of moving average works. However, I'm going to suggest you using 50 and 100 moving averages. The orange one is 50 and the green one is 100. By the way, at Forexia, we stand for naked trading. Okay? However, we are adding more and more useful things to work with against retail trader. And I just showed you at the very beginning, before I introduce you to ECR, that we can literally do this naked. But here is a tip for you that you can actually use it to confirm basically your analysis, at the same time get a good entry. So when you drop these two moving averages on it, especially 50 and 100, when people getting trapped, those moving averages will, within the shift, moving averages will cross each other. Now, what you want to find is that daily structure that we spoke about, where respecting that EMA, whether 50 or 100. That's the pure example of it. So if I'm going to trade naked, as I just mentioned, I would leave this alone. But using these two moving averages, this is actually becomes a perfect setup. And you can take this trade with as low as 15 to 30 pip stop loss, and your let me add this. So down here, you can go for as low as 20 pips stop loss, or even 10, it would work. And your profit is 360 pips. And that's just a simple moving averages retest. But you take it after you see a trap for retail trader. That's what makes it powerful, okay? And then you can continue taking basically retest of these moving averages in line with daily structure. When that daily structure happening and moving averages being respected, feel free to go with the direction. Doesn't matter if there is a very important support and resistance here. Now, take this. All these zones that I draw here, basically, as I mentioned, where retail trader take it as a support and resistance. Now, in the way, when they're on their way to the upside, notice how that same zones being trapped every single time, trapping traders to get into wrong position. This is a perfect head and shoulder. Yeah. Let's take this up here. There you go. Head and shoulder, respecting that resistance, and I promise you, you will find the small lower low being formed all the way to the consolidation, trapping you to the sell, inducing you to sell this pair just for them to come back and hit your stop loss. And you can see moving averages are far from each other. Nothing about them calling a sell. Nothing about this calling a sell. And now this trend becomes obvious. Now this trend becomes obvious. Notice that the last zone that I had drawn from previous trends and market data, people are going to see this as a sell, and then price push it up. After pushing price to the upside, what do we got here? First touch, we got second touch, and now, we got second touch, and now we got fourth touch. My bad. 1, 2, 3. And now it's confirmed, it's validated. And one down here, and more up here. So this trend is validated. Now this resistance became support, and this trend line touching 4 and 5, and right after it, inducing retail trader now to buy. Everybody see this? It's not magic. You probably paid for someone to tell you trade like this, or you find it on YouTube or some free courses that you can trade it like this. Agree? Now I'm going to talk about this yellow line, because you can see how perfectly it touched here and then broke it in session changeover and stayed above it for a good amount of time. Let's delete this area a little bit. I'm avoiding to have my chart messy, so just bear with me for a second. All right, so yellow line down here. I'm going to take you to daily time frame. I'm going to zoom out. You tell me if retail trader don't see this yellow line as an important area. Well, I'm trying to see if there's any data back. Not really, but look at that. Look at all this playing around this zone and validating it all this time. Worked here too. People got trapped off this zone once, and now what happened here? Basically one candle, daily candle, closed. Basically first candle, let me go this way, that's much better. First candle rejecting it, a daily candle rejecting a daily support, sorry, resistance, and then break this zone in an uptrend. Everybody going to buy everything they have, and also when they come right back down, retesting that trend line. Okay, and that's why we call all what happened up here a big trap. Okay, this is where price rejected it, and this is all that trap. So now that buyers are getting trapped, we are looking to see basically reversing. And then what happened next? That EMA cross. So EMA cross, and you can take retest of that. And my preference is to wait for that trap and stop hunt, which is that's the stop hunt right here. After you see, let me get rid of this too. After you saw price broke this EMA, came right back down, consolidating below this. Now notice that this is a zone being created by market makers. You already know buyers are trapped here and here. And if I extend, and if I extend this, you damn right, they're trapped here too. So they are keep getting buy signals, inducement, green candles, everything market maker has, they're showing it to them. 3 different type of uptrend you can draw in right this area. And you want to take that retest to the downside. You want to buy when everybody sell. You want to sell when everybody buy. And that's how you become the liquidity provider. Make sense, everybody? Let me know in the chat what you think, and if you have any question, shoot it now. Nothing? All right, good. Not sure if that's a good thing, but yeah, let's continue. So, oh God. And the cycle, as I said, happens over and over. Nothing changed until again you see the trap on the other side of the fence. Now again, retail trader seeing a break and retest, respecting their downtrend, and they are getting trapped into their sells. While market maker again hold the price here, so they have time to come every single day, update these lines, believing this is now a downtrend. Look how respectful it becomes, like even when you change it to all these areas. And then again, you got ECR coming into way after a trap. And you can again take every single daily structure after that. Personally, after I saw this trap here, I called a buy in Forexia Academy and my community, my VIP students, right after here, right after this week, which was trapping sellers, we bought, and you guessed it, the stop loss wasn't even 20 pips right here, and the reward went up 350 pips. Personally closed at 270 something pips after they was closing, 250 around. And that's just because I buy where everybody's selling. Sure, drop your questions, no problem. Show us DMA. Well, for getting DMA, you gotta be part of Forexia community academy, but this is accurate enough for you to make it happen. If you understand the structure and the fact that how to become a liquidity provider, you don't need DMA. How do we predict the next move? You predict the next move by finding the traps. Who's getting trapped and what is the direction? Like buyers or sellers. When you find that trap is happening, you see 1, 2, 3 days price below this level on a downtrend, not moving down, staying down here, keep rejecting these zones. So you know sellers are becoming trapped. You know price might go up. So you can just wait to get that perfect confirmation, whether a W formation or using moving averages. I'm literally giving you my entry, guys. This candle rejecting 50, I got in. I'm giving you the exact sauce, okay? I use the 14 and 50 EMA. Is 50 and 100 better? 14 and 50 is good. However, lots of retail trader use it and it get manipulated a lot. Also, because they are really fast averages, every single traps that is inducing retail trader will come with cross of 14 and 50. However, in my experience, 50 and 100 is a perfect setup in order for you to grab the, it happens after trap. When trap forms, then you see the cross, especially in 1 hour or 30 minutes. I don't really use 15 minutes. But use them, backtest them, and see what is better for you. You gotta use whatever it works for you. Someone said don't predict, react. That's right. But however, you can have a prediction and then only react if part of that prediction is happening and you wanna, continue taking that. So let's say if you saw this seller trap, you knew it's going up, but you didn't find a good entry here, okay? Then you can, react here, or didn't find an entry or didn't trust your analysis for any reason. That's when, just react here. Prediction is good. It makes you confident on your setup. I need to connect over and over. It's okay. I'm gonna share the recording on YouTube. Don't worry. How do we predict the next move? I just answered that. Okay. Someone else. Don't predict. Be sure by reading the candles, identify trap, then go against trap. Absolutely. Very well. Is there new liquidity formed all the way down at the bottom? Possibly, yes. However, I was seeing much more sellers trap than buyers, in down here. But the fact that this becomes a support makes me think that this is also a full induction, and beginning of the week, we might see a little bit more to the upside to induce people and come right back down, trap, grab liquidity of people down here, which is actually in line with the overall trend happening in Euro USD. Let me go daily. You see, it's overall is down. So if we find a buyer's trap, that's awesome to, you know, swing it. I understand the structure, but I don't get when you get in. I personally wait for that daily structure that reject my averages. Okay. So in this one, I was seeing that retail trap induction. Oh, 1 second. I was seeing that retail traders trap, and then I basically reading the candles. Okay, I'm seeing that all that trap is happening. Price comes above moving averages. Notice all this downtrend, price never, only once broke these averages and then came right back down. Why now it's breaking it and, you know, keep staying up? That's why I'm like, there is a reason moving averages and price are trying to tell me something. They're telling me that, you know, we're not going down. Price is respecting averages, and this is pure price action. I'm having my book coming up soon, Golden Candlestick, and I will explain deeply that why you should care about price action with moving averages or Fibonacci levels. Okay, so that's my entry. Let me remove everything. I went through whatever I wanted to show. This is my entry, my friend. This is my entry right here. This is my entry. This I wouldn't get in, but I would hold from here because they didn't really touch my averages. I'm not really happy, but after this engulfing, you know, stop on high engulfing, you can get in right here. Same as this, stop on, you see that wick, stop on high engulfing candle, you can get in. Retest of 50, you can get in. Even this one, you should have been break even. Let me see how many people this. Even if you take this one, that usually a dangerous type of ECR, look at that, 84 pip. So if you lost here, you're greedy. You didn't break it even. So yeah, entry as simple as EMA cross retest in line with daily structure. These are all entry I'm showing it to you. When you explain really well, fire sauce, thank you, man, thank you. That reversal had 3 bounce on the support line, so how do we know it's a reversal? As I said, the amount of sellers being trapped, in my opinion, was hell a lot more than buyers, because at the very beginning, newbies, everybody learns to follow that trend line, find this support line, resistance, trend line, and follow that lead. And again, I'm agree with you guys, people being trapped here 100%, 100%. And that's why I'm not really taking Euro USD buys like really high. I think it's gonna come back down. But let's take a look at, you know, macro. Let's go to like weekly time frame. 50 or 100 or 50 or 200. 50 or 100, yes, it will work in 15 all time frame. It will work, and it's a good average basically for all time frame. However, I really suggest you guys, in terms of, take this as another sauce. I really suggest you guys that in terms of moving averages, take them more as an entry method and keep it in one time frame. So let's say you in your trading plan, you should have a specific time frame for your entry. You'll be like, I'm entering in 15 minutes time frame. Personally, mine is 30 minutes. I enter in 30 minutes time frame. And I only take those averages into consideration when I'm in 30 minutes time frame. Like, I'm not going down and be like, it's a reversal in 5 minutes or 15 minutes. It's crossed, but in 30 minutes didn't cross. No, my entry time frame is 30 minutes, and I only look at 30 minutes moving averages for getting entry. Now, if you get DMA through Forex Academy, then you will be equipped with all different averages that you need to use for each different time frame. Okay, I hope it makes sense. So this zone I wanted to show you that is actually, I'm seeing it here, was worked before. So yeah, there is a very possible chance that price come back down. And if you take a look at this, that makes sense. And this also makes sense. Okay, 1, 2, 3. Let's drop this one down. That also makes sense. Okay, so what we want to see is consolidation around here, breaking this trend line, and then pushing for the liquidity downside. This is what we want, a daily structure in more macro level. So now these buys will have sellers trap, and once trap is, well, buys, I'm not sure which buys you're talking about. Just explain a little more. The channel in YouTube, you can search for golden pips generator or Forexia. I sent it in the chat room. Once seller's trap is over, then we can enter buy. That's correct. Once you see, well, you don't really can see trap is over. You're just gonna give it the time. In order for a trap to form, it takes time. You wanna see a zone for retail trader being respected for such a good amount of time, and then they fail to break it, whatever like that, and also not giving them profit. Something that I was considering it here. I was like, if that's actually a sell and support is being trapped, they had to go down, you know, and the fact that they run away, come back here, stop. So basically they are in this range, trapping sellers, not showing them any profit. That's two important key for me. Sorry. Will the recording available at Academy? It's going to be on YouTube. Do you enter at close of 30 minutes or 60-minute candle? I enter at close of 30 minutes time frame. However, if I see a break in 30 minutes time frame, like let's say, let's go to 30 minutes. All right, that's a good example right here. Sorry. Let's see if that's actually like that. Let me just check it real quick. All right, that's perfect. Okay, take a look at this. This candle right here broke the 100. Everybody agree? Everybody can see this? I want to teach you a good fractal lesson. Everybody can see this breaking 100 average, right? Now, the time that this candle closed, it's at the time of 30 minutes candle. Okay? And then when price basically closes the hourly, there is no break. Okay? There is no break. So what I would do, look at that even in 30 minutes. As I said, I don't need to change time frame. This broke it, so I wait to see what next candle does. Next candle comes right back up. That means in hourly, this did not break 100 moving average. Okay? So my time frame for entry is 30 minutes. However, if the actual time show me that there is possibility that, you know, within the hourly candle close price come back, I would wait to get a better confirmation. Let me check the chat again. So do you enter when it tests 100 or 50? Either of them. I more like to see a rejection like this, And then if that rejection happened, I don't really care which one is it. It's exhaustion when price can break it and go to the opposite. Yeah. So you mean here. So let me give you an example like this. Let's say you are trading, this is a zone for you, and they told you that when this zone is broken, it will go up. So you keep buying it. You keep buying it, but it goes right there, come back to the zone. That means price is giving you that confirmation, not giving you any profit, in making you to whether add more, or if you didn't make the decision to enter, you enter. And the last time, break it a little higher and completely reverse. Let me take this off. Okay. Like that. So this is what I mean. When I see one side is getting trapped and they're not seeing profit, they're just getting trapped for a day or two, then I would consider coming back down instead of, following the pattern that people make money off, Thanks, man, for recommending us. Then continue the previous trend. Yeah, if you're talking about this buy, yeah, I believe this is an induction, and at some point, at some whether 1.12500 or 1.12, EU might form buyer's trap and comes for down. Great. This seems like a good strategy for small accounts where drawdown cannot be too much. I agree, but with all accounts, like you don't really want to see drawdown in any account, even when your account is much larger. Like I'm comparing a year and a half ago with now. Now I really don't want to see red, because it's too much. But before it was like, okay, it's like 50, it's like 100, it's like 200. But the more your account is getting bigger, you gotta try to make that drawdown less and less and less as much as possible. And one of the reasons I really like entry with moving averages is when you get that perfect confirmation and you participate, then you really don't see drawdown. Now, I personally break even my trades really fast, like within 1 to 2 risk to reward, I break it even. And for example, in this trade right here, I got to stop out on break even 3 times. Like my original entry was gone, I got in, was gone, I got in again, was gone, and the last one, which was my last hope, and I was seeing that, I was seeing that retail trader are keep getting trapped, so I was keep trying my chance to go up. Yes, drawdown is hurtful for both, but however, it's more psychological. If you care about pips and percentage, you don't really care. Even if you see red, at the end of the day, you might lose a managed percentage of your account, and it's not gonna bother you, especially in our way of trading. When GBP USD, we had a that was also analysis that I had. Let me choose this one. So this is a perfect trade where we caught it right around here with 30 pips stop loss for 1600 pips profit. And that crazy amount of risk to reward, I took 1 to 58 risk to reward. Brandon, other Forex mentor, took 1 to 85 risk to reward. And by this amount, this crazy risk to reward that our method has, then you don't really care even if you're in a losing strike for 4 5. I don't even care about 10 losing, because that's literally one trade. Like this week I had 2 trade, 1 to 10 risk to reward. Nothing impossible about it. Stop listening to baby peeps, these people who have less goal, small goals, small thinking. Think big and be aware of opportunities. There is a guy who turned 22 million in 2.6 billion in this financial crisis that is happening right now. So risk to reward, what you heard on baby peeps, is just to make you think small. And at Forexia, we try to help you think big. And just to add it in this session, literally what we spoke in Euro USD, the trap of trader, retail trader, in different kind of support zones, and also that perfect daily structure respecting moving averages allow you to basically take great trades with really really high risk to reward, like crazy. And even if it's coming to the back down side, you can see stop on low, high, and consolidation, stop on low, high. Now we cover this daily structure in lots of videos in our channels, which you can go and enjoy. That's correct. Proper risk management can wipe a lot of losses. Awesome, guys. Thank you for being in this session. It went 1 hour and 15 minutes. So I really appreciate everybody for being in the session with me for this time. I hope you guys enjoyed and learned something new. Make sure to follow us on social media by ForexiaNet. Subscribe to our YouTube channel. A lot of great videos. And also, for those that are very new to Forexia, we do have a 3-hour free course for you guys. Just type in forexia.net and join this amazing community with us. Let us help you make a lot of money in the financial market. Thank you again. I'll see you in the next sessions in the upcoming week. Peace out.